Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, April 9th, 2007, and the market's closed. The Nasdaq 100, the Qs, did lose 11 cents today, and you can see that really no damage done. This market had gotten a little bit extended here the last few days as it rallied after that, I guess it was some Fed comments maybe last week. You know what, I don't even remember what they assigned the reason for, but more importantly, after the market found support at the prior resistance level and bounced higher, that's how the market got extended here on the short-term time frame when it moved past that 43.65, 43.70 area and back above the rising 5-day moving average, or what's now a rising 5-day moving average. You can see the market had gotten a little extended, and we continue to give the benefit of the doubt to the buyers, and still looking for the best level of support down near this 44.20 to 44.30 levels, what I said over the weekend, and that becomes a little bit more important because we've got the rising 5-day moving average in that area as well. We did see today, though, that the market did make some lower highs in here, and then towards the end of the day, we got a lower low. So it looks like the short-term trend, that is the trend of the last couple days, you can look at it on this trend line as well, has been broken, and now looks like we might get a pullback down towards that 44.20, 44.30 area. That's what I think is most likely to happen in this market. I don't think it's a big short sale opportunity because we've still got, again, that rising 5-day moving average, and on the daily time frame, we've got the 10-day moving average above the 50. This 20's coming up pretty quick, and it'll get it back above that 52, and things are just looking a lot more bullish here. In particular, what I've been noting was this, what's looking like an not an inverted, but a cup and handle here, this being the cup, and right now sketching in the handle. So, you know, hopefully what we see is this level of prior resistance at the height, at the top of the pattern, does in fact become support. And what happens a lot of times is we actually get a shakeout just a little bit below that, maybe down towards 44, just to scare enough people out of their stock so that they'll buy it, scramble to buy it as it moves back higher, and to suck some more shorts into the market. But it looks like maybe just a little bit of consolidation coming over the next day or two before the market can hopefully continue to push higher, because I like making money. I find it easier to make money on the upside than the downside. That's my personal preference. S&P 500 is also, this market closed actually with a 20-cent gain. So we saw them close 20 cents higher, although, you know, the close was lower than the open, no big deal. Someone asked me over the weekend, do you know, I never hear you really reference candles. You use candles. And I think, you know, the reason I use candlestick charts is just because they look better. I pay zero attention to dojis and hammers and shooting stars and flying dogs and whatever the heck they're called. There's, you know, thousands, hundreds of patterns that you could waste your time memorizing. And obviously I have an opinion here, so realize I'm not being objective when I say you can waste your time looking at them. But I think what's more important is to understand the trend on multiple time frames and look at the action underneath the surface here. And the action underneath the surface is that we had a good little uptrend going here, and late in the day we saw a lower high. The S&Ps also did make a lower low, right, by taking out this little low. So that puts us in the defensive on the S&P 500. And I was saying that 142.50 is the best level of support, which I still believe, but I think that 143.50, 143.60, near that rising 5-day moving average and near this prior consolidation area on the 3rd and 4th, that's where it's more likely that we're going to look to see if there's some support. If this market does continue to pull back a little bit, you know, also, of course, that's this prior level of resistance from late March. So all in all, the S&P 500 still is very healthy, nice, bullish uptrend. Maybe a little bit extended, could pull back just a little bit, but I don't think there's anything to be concerned about in here. The IWM, what we were looking for, I said, is that basically the 81 even level is really where this market needs to get above to really have confirmation that we have this higher high. We have clearly higher lows in here, and we have this higher high, but now to take it really to the next level, we've got to get it above 81 bucks a share. And you can see that even $80.80 that is, looks like a short-term area of resistance for this market. And support now, I think, is down near 79.75 to 80 and a quarter. So 80 and a quarter is broken. Perhaps we see a continued pullback down towards here. Personally, I hope we don't get a pullback that deep, because that would close this gap and kind of get a lot of more selling, I think, from longs liquidating and shorts getting more aggressive. The S&P 500 or SMH last week, I was concerned that if it broke 3320, there could be bigger implications based on this stupid range it's been trading in for the last 6 months on the daily time frame. But it was able, the market did recover from that level, and now it's making this nice series of higher highs and higher lows up until today. So it looks like consolidation in this market as well, and 3390 rather, that could be the support area that this stock, this market, the semis pull back to in the short term. But again, it's within the context of a much bigger sideways range-bound market, so there's really not much reason to be paying too careful attention to the semis unless they do something dramatic. AKRX was a stock we looked at yesterday. I'd caution that it's a thinly traded stock, and we wanted to perhaps get long above $6.65. The stock did get above $6.65. I had suggested a stop of $6.48. That was tagged early on, so if you were in this stock, it looks like it gets stopped out for a quick 17-cent loss. ALXA was another stock that I said this one, you know, if you're not a strong trader, basically stay away from this one, because it's been thin lately and it is a volatile stock. Anyways, we're looking for a move past $12.30 today in this one before getting long. You can see there was no move above $12.30, so there was no reason to get involved in this stock today. PDLI, this PDL BioPharma, wanted to get long this one above 21.85. You see that did occur in here. Let's take a look at a 1 minute time frame. You can see it did occur right in here early on within the first couple of moments of trading today. So officially we got in the stock, and officially we got stopped out soon thereafter as it traded down through $21.63. So $22 loss, 2-cent loss in that stock. American Express, another small loss. Wanted to sell this one short below $55.80 and did get involved in it right there. Fortunately, there was a tight stop of just 25 cents for a high price stock. That's a very tight stop, and we got stopped out with a 25-cent loss. So one we didn't get involved in, and we had 3 losers. That's not normally the case, but that's trading sometimes.